The Real Estate Now Podcast, Episode 1. Hello, and welcome to this episode of the Real Estate Now Podcast. My name is Jason Reynolds, and this is the podcast dedicated to those looking to buy, sell, or invest in real estate. The world of real estate is exciting, but it can be a complex, confusing, and sometimes stressful experience. Our goal is to break down the many moving parts of real estate transactions step by step to help you be better prepared in the future. Join us as we share tips, lessons, and information from professionals from your community and around the world.
All right. Good morning, everybody. This is Jason Reynolds with Visions Realty and Investments. So today on the phone, we're actually visiting with Terrie Goodloe with Service First Mortgage here in Burleson, Texas. And we're going to kind of walk through some financing options for folks. We figured that might be a good thing to talk about here on this podcast. So without further ado, Terrie, can you tell a little bit about yourself, how long you've been in the business, how long you've been in Burleson?
Yes. Hello, Jason. Thank you for having me this morning. I have grew up in Burleson, have lived in Johnson County all of my life, other than a small stint in college, but have been in finance and mortgage for over 20 years. So I've seen the ups and downs in the market and the mortgage industry per se, but I'm excited to be here and chatting with you this morning. I appreciate it.
Hey, you bet. So that's the first thing you talk about is you've seen the market over time. Can you kind of walk us through what current interest rates are now and, maybe what you see them do? I know they're going up, but can you kind of tell us what you see them doing maybe over the next 6 months?
Yes. I mean, historically speaking, we see interest rates moving up in the spring, leveling out in the summer, and typically, historically speaking, dropping back down in the end of the year through January, February. And this year is not a whole lot different other than we are seeing interest rates moving upward, starting it really in January with the market and the economy. So there are a lot of things out there that drive the market and the interest rates for mortgage financing, specifically the bond market. So when we see the stock market increase in their value, we typically see the bond market go down, which is tied to interest rates and lower rates. So in the industry, we're looking at increasing interest rates over the next, 4 or 5 months. And currently the interest rates are driven by the mortgage type and your credit scores. So, better credit gets a better rate, and also determining in that, market as far as if the type of mortgage, if you're getting down payment assistance. So, what we're seeing right now is FHA conventional 4.5, higher rates for lower credit scores and different types of other financing options.
Okay, awesome. So then we're looking, good credit, and that's also something probably important for folks to understand is that your credit can also influence, like how much, like would you say somebody who had a great credit score can maybe get a 4.5%? Versus somebody who maybe was right at the cusp of being able to get a mortgage, like how much more of an interest rate would that equal sometimes?
Looking at a client just yesterday in the market with FHA financing, their scores were just over 600, and 600 is our minimum credit score for financing with Service First Mortgage. And at that 600 credit score, we were looking at 5 1/8 to 5 1/4 on interest rate for FHA.
Okay. So we didn't talk about this question, Terrie, but I'm jumping into it.
All right.
So, what do you say is the benefit, because you've worked with a lot of my clients, And so, a lot of clients sometimes jump in and they're looking and they say, well, I can get a better interest rate on, I don't know, lendingtree.com or some national bank, some website they found. So what's the difference, because I've always been an advocate for, hey, use somebody that's here locally that you can use, that you can call if you need help. What's the difference between, using you versus a bigger bank? And also, we've talked about this before. Can you elaborate on their interest rates may look good up front, but when it comes to closing time, what does that look like too?
Well, when you're looking at, the market as a whole, as Service First Mortgage, we are competitive. We want to be competitive, and we are local. So you can come into my office. You can find me. You can call me on my cell phone in the evenings and on the weekends. So when you are working with the big banks or the internet companies, they don't necessarily have a vested interest in our community. They're not active here. They're not local here. You can't get a hold of them if you needed something quickly, whereas I'm available. I'm here to provide a service to my community as well as my borrower and my client. So I think it's important to know that, I hang my hat on my honesty and integrity in getting things done. Like anything, you can find somebody out there that's going to tell you what you want to hear. But when it comes down to getting the job done and being honest and closing the transaction on time, those are where the internet companies and the big banks struggle, because their front end people that are on the phone or on the internet don't have the 20-year experience in the industry that I have or my manager has. So being able to answer the questions, getting the correct documentation up front. In the initial interview with the customer is so important, because I can ask them questions and I can hear the answers, and within those answers there are other questions. Whereas if filling out an application online through an internet company, they can't hear the client's voice. They can't ask the client open-ended questions to really get to know the customer.
Right. Yeah. They also probably don't pick up their phone at 9 o'clock when you need a pre-approval letter like you do.
Correct. Exactly.
Okay. Awesome. Yeah. No, I just speaking on experience, there's been many times where I think I've called you after hours many times asking for a pre-approval letter, because in this market, we need it. So we just don't get that with the big banks. Okay, awesome. So real quick, I want to walk through the different types of financing. And, there's tons out there, but I wanted to kind of get an idea of types of down payment and benefits, pros and cons of these types of loans. So the first was FHA. What kind of borrower would be looking to use an FHA loan, and what type of terms are we looking at?
Well, with an FHA financing, that's typically reserved for your first-time home buyer. Although you don't have to be a first-time home buyer to get an FHA loan, it allows the borrower to get into a property with the lowest credit score. And how that happens is an FHA loan is secured or guaranteed by the federal government, or FHA, Federal Housing Administration. So in the event that the borrower defaults in that type of loan transaction, the lender is not out, because it is government secured by mortgage insurance. So, and that's paid through the loan. So with FHA financing, we can finance a borrower with credit scores down to 600. They have a minimum down payment of 3.5%. The seller, although it's a little bit more challenging in this market, is allowed to pay up to 6% of the borrower's closing costs. And so there's a lot more flexibility in the financing as far as the overall picture. So when we look at mortgage financing, we're looking at a big picture. We're looking at the borrower, the borrower's credit, borrower's ability to repay the mortgage note or the payment. And we also are looking at the property specific. And so the property also has to pass an appraisal with that, there can be no problems with the property. It has to be in good working order. So FHAs are more strict on the property side, but more lenient on the borrower credit score side.
Okay. So then how does that change as we jump down to conventional?
Conventional financing is money lent by a bank or financial institution. So they're looking at the borrower's ability to repay that note because there's no security specific if that borrower defaulted and quit making payments and the bank gets the house back. The bank's not in the business to manage properties. They're in the business to lend to borrowers. So you have to have a little bit better credit score. However, there are some loan programs within conventional financing with really good credit. You can get in with as little as 3% down. So, and lower mortgage insurance, again, with high credit scores. So, we are doing more conventional financing than I've ever done in my 20 years, but you can't have as much debt with a conventional as you can with an FHA. So what we call your debt to income ratio is a little stricter than on FHA financing. So with each loan program, there are different guidelines and different parameters. So it's important that your lender, your loan officer, that the person you're speaking with knows the guidelines and can fit you as the borrower into the best product for your financial situation. It's just not a here and now. I don't look at it as a here and now, let's get you in here, but let's look at the bigger picture. What is the borrower's financial goal for the long term? Okay.
So then on conventional, you were saying on FHA credit scores can go down to 600. What's minimum type credit score for conventional on average maybe?
It goes back to, on conventional, you're looking at a couple things. You're looking at down payment and credit score. So with a bigger down payment, your credit score can go down to 620, but you're paying a higher rate, again, with a lower credit score. So for the best opportunity to finance with conventional is going to be to have a credit score. If you 680 to 720, you're going to get your better rates. And then over 720, you're going to get your best rates.
Okay, great. So then VA financing, can you just, explain real short? I mean, I know that's a 0% down program, but
there are two loan programs that specifically require no down payment. And one of those loan programs, they're both government or federally insured. So one of those is a VA loan. You have to have served in the military and received veterans benefits to get a VA loan. A VA loan is only for owner-occupant properties, meaning the veteran has to live in the house. We can finance a spouse of a veteran who is deceased by way of a disability or the service of the veteran caused their death. So if a spouse of a deceased veteran can also obtain mortgage financing with a VA loan, and that again is a zero down payment. Now there are closing costs associated with every real estate transaction, so the veteran would need to have the means to pay their own closing costs, taxes and insurance and title fees. The other loan program is called USDA. And the specifics of the USDA loan is that the property specific has to be rural in nature, meaning the economics or the population of the city where it's located goes into effect. So if it's outside of any large metropolitan area and outside the city limits, it would go with that USDA financing. No down payments required. The USDA loan also has an income cap. So there are certain income requirements. You can't be over, I believe USDA is like $82,000 annual income for the borrowers on the loan. Or it actually goes by household income. So if you have a couple and they have a 17-year-old son or daughter that's working, then that income is part of household and would be counted.
Okay. Now, on both VA and USDA, credit score plays a role in that still, though, correct?
Yes, we can go down as low as 620 on VA and 640 on USDA.
Okay. Perfect. Well, we are at 17 minutes now, and I know I said 15 minutes, so, a couple questions we had left here that I think what we'll do is we'll try and do a second session, is talking about working through maybe credit issues, because Terrie is great about, meeting with folks who maybe aren't at that point yet, but she can definitely tell you how to get in a good spot to where you could get a mortgage, and then maybe talking about some down payment assistance programs as well. So we will save that for a session 2, but thank you, Terrie, so much for jumping on with us.
Thank you for having me. I appreciate it.
Can you just remind us again where you're at, and then also how folks can get in contact with you?
Sure. I'm located in Burleson, Service First Mortgage, 437 Southwest Wilshire Boulevard, right in the heart of Burleson, Texas. And I can be reached by cell phone at 817-925-8306. Or you can search me on the internet at terriegoodloe.com, TerrieGoodloe.com. Would love, anyone can apply online. If you have access to internet and a computer, you can click a button that says apply now, and I can reach out to you once you complete that application, or call me on the phone.
Alrighty, everybody. Well, it's time to wrap up today's episode of the Real Estate Now podcast. Could you do us a quick favor before you go? It only takes about 30 seconds. Head over to iTunes and rate this podcast. This will give us valuable feedback of what content is helpful for you, and it also helps improve our rankings that will make the podcast more visible so other people can find it. Thanks so much for helping us out. If you would like to learn more about real estate and how we might be able to help you, please be sure to check us out at visionsrealty.com. Again, that's visionsrealty.com.